Okay, let's dive into the sources you send over. Big headline, right?
Yeah, the Canadian dollar.
It's really strengthened, hitting what, almost an 8-month high against the US dollar?
That's the one. And digging through the reports, it seems like there are really two main things pushing this. You've got the Bank of Canada's latest interest rate decision, and then, well, just a general dip in the US dollar itself.
Right. So for this deep dive, let's try and unpack that. Like, why these two things? Why now?
Exactly.
And what's the market reading into all this, especially for the Bank of Canada?
Yeah.
What's really going on with the loonie?
Well, let's start with the Bank of Canada then. So their last meeting, they decided to keep their main rate steady.
Right, at 2.75%.
Yep, 2.75%. And that's the second meeting in a row they've held fire, after those cuts they started last year.
And the analysis here suggests the market basically saw this coming. Didn't one piece call it a free pass for the bank?
That's right, yeah.
Yeah.
It was pretty much expected, the hold itself. But what's really interesting, according to your sources, is the reason they gave. They actually said, point blank, they need to, quote, probe the effects of U.S. trade policy.
Wow. Okay. So that's explicit.
Very. And they even added that, another rate cut might be needed later if the Canadian economy starts to look weaker because of potential U.S. tariffs or trade issues.
So they're essentially hitting pause on their own policy moves
Yeah.
directly because they're waiting to see what happens down south.
It really seems that way. It shows just how much these external factors, especially from the U.S., are weighing on their decisions right now.
Okay.
Meanwhile, the market, well, it acknowledges the pause, but it's already looking past it.
Thinking about future cuts.
Yeah. The data suggests investors are pricing in something like a 45% chance that the BAT starts cutting again, maybe as soon as July.
Right.
And then looking out to the end of the year, they're expecting roughly 36 basis points more in cuts, so 0.36%.
Which is still expecting easing, even if it's a bit less than before the announcement.
Exactly. Still a clear signal the market thinks cuts are coming eventually.
Okay, so that's the Bank of Canada side. On hold, watching the U.S. trade situation closely. What about the other piece you mentioned, the weaker U.S. dollar? What's driving that, based on the reports?
So several sources point to recent U.S. economic data. Specifically, private payroll numbers came in softer than expected.
And that's seen as a sign of the U.S. job market.
Maybe cooling off a bit, yeah. It's a key indicator for labor market health.
Right. And how does a cooling U.S. job market usually hit the dollar?
Well, it tends to make the market think the Federal Reserve, the U.S. central bank, might not need to keep rates quite so high.
Or might even cut sooner.
Or could cut sooner, exactly. Higher rates attract foreign money looking for better returns, boosting the currency.
Yeah.
If the expectation shifts towards lower rates, that attraction fades and the currency can weaken. So weaker jobs data can take some pressure off the Fed to stay aggressive.
Got it. Less need for high rates, less demand for the dollar. Makes sense.
And that weighs on its value against other currencies, like the Canadian dollar in this case.
Okay, so we've got this combination. The BoC holding steady, pointing directly at U.S. trade issues.
Right.
And at the same time, the U.S. dollar itself is softening because of weaker U.S. data.
Your sources also mention things like oil prices and bond yields.
Yeah, those add context like oil down on OPEC plus news and Canadian bond yields falling, but not as much as U.S. ones. But the core story for this specific loonie move based on this material,
it really seems to be that Bank of Canada stance and the U.S. dollar dip.
that's the main dynamic, yes. The BoC is waiting, watching the potential trade fallout, hinting at cuts if needed.
And the market's already betting on those cuts happening down the line.
Precisely.
So it really leaves you thinking, doesn't it? Given how openly the Bank of Canada is linking its current pause to needing to understand U.S. trade policy impacts.
How much of the Canadian dollar's future path is actually being decided not in Ottawa, but really by forces coming out of Washington and the broader U.S. economy?
That's a really interesting question to ponder looking ahead.